What's up, investors? It's the Russian dude. Let me briefly show you fear and greed index. So on the stock market it is fear, with the number of being 34 out of 100, and the crypto market is greed, 73 out of 100. In this next picture you can see the upcoming earnings reports for this particular week, so feel free to pause the video and see if you see any of your favorite companies. And right now the earnings season is pretty much in its peak. 14% approximately of companies already reported, obviously from the S&P 500, and 74% of them, they were able to beat their EPS, earnings per share, expectations. Speaking about some particular companies, such as for example NVIDIA, it is experiencing right now a pretty big downfall. Most likely we did reach the peak. I mean, it was pretty overvalued in my personal opinion. And so one of the most recent drops, 10% in one single day, this was the biggest drop for the last 4 years. The previous one was during the beginning of this world shutdown. Another company which is favorite among retail investors, Tesla, is also expecting some bad news in the near future, and most likely they will see a revenue decrease, one of the very first time in many years. And one of the potential reasons why people think this is happening, it is because Elon Musk deviates his attention from his master company, Tesla, and he is trying to do so many things at the same time, let alone purchase of Twitter and renaming it to X, where it looks like the majority of his attention goes right now. And then also his robot taxis, which he spends so much effort, and it does not look like that the project is moving anywhere. So yeah, basically that's what people say. Tesla is losing a little bit of its leadership and vision. But these two companies, NVIDIA and Tesla, are not the only ones. It is just entire stock market, and specifically technological and risky sector in general. Such as, for example, the next picture, the next slide, as you can see right here, the inflation expectations are climbing up once again, even though right now we are in the tight policies, which basically means that the money printer is off and the Federal Reserve is constantly either increasing or keeping its interest rates relatively high, which kind of supposed to bring the inflation down. But as you can see, once again, major investment houses, they do think that right now, if you remember from my previous video, the inflation stopped budging, stopped responding to currently relatively high interest rates of 5.33%. So unfortunately, it might mean that the inflation might start climbing once again up. Another thing which does show problems for a technological sector, which usually does not pay that many dividends or no dividends at all, is that a lot of actual dividend paying companies, they do start attract more and more investors, because right now technological sector risky investments are not as profitable as they used to be. Once again, one of the main reasons are high interest rates. So people are starting to switch to more classic, to more safe, if you want to call it like this, investments. Either fixed income securities, bonds, treasuries, or simply dividend paying companies. And another very interesting observation is that for the last 40 years, the Federal Reserve has never decreased its interest rates whenever the PMI index was going up, which is exactly what is happening right now, which could be another reason that interest rates might simply not go down in the near future. Jerome Powell already mentioned that they will most likely stay where they are right now for an extended period of time, and now we might not see a decrease at all for the foreseeable future. And even other major investment companies such as UBS or Goldman Sachs, they started downgrading the biggest companies in the S&P 500, such as Meta, Amazon, Apple, Netflix, Google, you name them, NVIDIA obviously, and they started to urge investors to fix their profits. And once again, one of the main reasons for this is the current economic environment with extremely high interest rates, where those companies are underperforming, and it makes sense, because they are using a lot of borrowed capital to continue their research and development activities, just to name a few things which they do with this borrowed money. And whenever interest rates are high, obviously borrowing money is way more expensive. That is why they do have maintenance interest payments are way higher than usual. So they cannot first of all borrow that much money, and even that money they do borrow, they have to pay a way higher interest for this, which basically means a lot of companies prefer to suspend their research development activities and just go with the flow at least until the interest rates start climbing down. And just for example, to show you the general picture, Nasdaq 100 has shown the biggest weekly decline since November 2022 alone, which is considered to be one of the worst weeks for Nasdaq as a whole. Even the S&P 500 index last Friday, April 16th, showed 6-day streak of constantly going down every single day. And since 1994, there were only 24 cases when it was going 6 days in a row or more. And while we do still have one last week of April left, a lot of people, a lot of investors consider that this month can be the worst in at least last 2 years. But if you remember from the beginning of this video, yes, there is a very big fear on the stock market. On the other hand, there is a pretty big greed, a lot of positivity on the crypto market, and one of the reasons for this is obviously one of the most recent fourth halving of Bitcoin. Just in a very quick explanation, halving means that as soon as Bitcoin miners they receive a Bitcoin, as soon as they extract Bitcoin from the system, they are getting rewarded. And well, halving means that simply this reward is cut in half. Obviously, what it means further is that as soon as halving starts, as soon as halving is complete, I mean, a lot of Bitcoin miners, they don't see any more feasibility, they don't see it reasonable to continue mining Bitcoin, so a lot of them leave this industry. It is even calculated that the price for extracting, for mining one Bitcoin in 2024 can reach approximately $53,000, which obviously means the price of Bitcoin itself needs to stay above this level for Bitcoin miners to even make profits. And because once again a lot of, or at least some of them, will leave this industry of mining Bitcoin, theoretically the price of extracting, the cost of acquiring with one Bitcoin for Bitcoin miners can drop to 42,000, which once again can bring some of them back. This is your basic also way of seeing how the supply and demand in some way, in one way or another, works in the cryptocurrency market as well. If you also remember, according to my previous video, it is relatively expected that the Bitcoin price will go up eventually after halving is done, and some other people, they think that the price of Bitcoin after halving was already included in the price before halving actually happened. Such, for example, are institutional investors, which they decided to take profits. They might not be as flexible as retail investors. They cannot just buy and sell their entire portfolios in every single day. So a lot of them, they decided to at least fix some profits. 1 week before halving happened, it was estimated that approximately $82.5 million were extracted, were fixed as profits by institutional investors in terms of Bitcoins, and the week of halving when it happened, $204.3 million worth of Bitcoin were locked in as profits by the very same institutional investors. Basically, what they are trying to do is to take profit. But it is not the same for the majority of regular retail investors who just continue to hold their coins. As you can see from these graphs, they are patient enough. Majority of them, not all of them, majority of them, they are patient enough to wait until the next parabolic potential growth. And in this next picture, you can see the behavior of Bitcoin's price 1 month and 1 year after halving happened, and obviously without a doubt there was a huge volatility 1 month right after halving happened, which is what we're seeing right now. But most of the time, almost all of the time, 1 year from whenever it happened, the price did go up eventually. After first halving, the growth was extraordinarily high, after the second was very high, after the third one it was high, and still right now a lot of people are already familiar with Bitcoin, with halving, with how the whole system works, but they still expect that Bitcoin might, just might, I'm not saying it will, it might, the price of Bitcoin go by more than 100% within 1 year, so we might see price per coin somewhere above $100,000. This is not my conclusion, this is not I'm saying it is going to happen, these are just the estimations, the assumptions. If I knew those things for a fact, what stops me from selling everything I have, investing in Bitcoin, and then just locking in my profits 1 year later, right? So these, once again guys, are just assumptions. Please be careful, don't base your decisions, investment decisions on this video. This is just for entertainment and research purposes. Do your own research all the time. Please subscribe to my channel if you found this video helpful. Also, don't forget about liking and sharing it with your friends. Thank you guys so much for your attention. I will try to make these daily episodes if possible, and see you next time.